Hello, good day, guys. My name is Nick, technical analyst with SuperForex. Today, we shall be looking at the technical analysis on the currency pair NZD USD. And first, we'll be talking about fundamentals before we move right down to technicals, which is purely what we're going to be seeing on the chart. Now, we have seen that NZD USD has bounced off over a 1 month low, still deep in the red below at the 0.6200 mark. The NZD USD dives to over a 1 month low in reaction to a softer domestic consumer inflation figures, right? A modest downtick in the US bond yields undermines the USD and helps limit losses for the pair. The fundamental backdrop favors bearish traders and supports prospects for additional losses. Now, the NZD USD pair comes under intense selling pressure on Thursday and drops to the 0.6150 to 0.6145 area, or over a month low, in reaction to the softer New Zealand consumer inflation figures. Now, spot prices, however, trim a part of heavy intraday losses and rebound, as case may be, to the 0.6175 to 0.6180 region during the European session. The United States dollar edges lower amid a modest downtick in the US Treasury bond yields and moves further away from a 1 week high touched on Wednesday, which in turn is seen lending some support to the NZD USD pair. They said that the prospect for further policy tightening by the Federal Reserve should at least act as a tailwind for the US bond yields and limit the downside for the USD, at least for the time being. What to expect from this? Furthermore, data released earlier this Thursday showed that the headline CPI decelerated from the prior quarter's 2-year high of 7.2% to 6.7% in the 3 months to March. This could be seen as a first sign of cooling inflation and entails that a slightly less hawkish stance by the Reserve Bank of New Zealand, suggesting that a part of at least resistance for the NZD USD pair is to the downside. While our market participants now look to the US economic docket, featuring the release of the usual weekly initial jobless claim, while the Philly Fed Manufacturing Index and existing home sales data later during the early North American session. This, of course, along with speeches by influential FOMC members, says that the US bond yields and the broader risk sentiment will drive the USD demand and provide some impetus for the NZD USD pair. So what do we expect from these technical levels to watch? We are looking out for today's last price at 0.6177 and today's daily change at minus 0.0023 and a total daily change of minus 0.37. And today's daily open, checking our daily time frame, had been at 0.62 to be precise. And looking at our RSI, it is slightly below 70 and looking to go downwards, of course, following a new high impact news today on the United States dollar currency pair. The daily SMA 20 at 0.6241, daily SMA 50 at 0.623, daily SMA 100 at 0.6303, and daily SMA 200 at 0.6163. So what to expect from this generally? We are looking at a free fall to the downside and a probable move up back to the 0.62269 zone. But first, we are watching out for momentum to kick before we can make an entry to this trade, of course. From this entry point, we are looking at 52 pips from that point. Alternatively, it could be a decline to a near stop at 0.61221 axis. And that's our technical analysis on today's currency pair NZD USD. Now let's move over to the stock markets. Welcome back, guys. And on today's stock market, we'll be having a look at Amazon. And recently, we have been seeing our various headlines about Amazon since April. Biden Amazon in Italy probe over tobacco heat advertising, one of many. While a second of porn on Amazon's Kindle app prompts warnings from Apple and Alphabet. And finally, UK regulators probe Amazon's planned purchase of iRobot. So this, of course, has been having series and series of interest in the Amazon market. And recently, right after this, we had seen a spark up on a daily time frame, a move up to the upside. ranking at about 2664.55 point, and this was at from 2368.41 to 25.7.28, which is at about 1,480 pips, so wholesome from that entry point. So currently we are seeing a bearish candle, which signifies a possible reversal, supposing it ends as a bearish pin bar, but looks closely, see if it's going to be, and this should signify a reversal in the market based on what we're seeing currently. So if we were to make an entry at this point and let our trade run down to the 2386.75 axis, we are looking at about 3,641 pips from that entry point, of course, which is good money. And this keeps building up a lot of momentum. Looking like something like this definitely could happen. And on the 4 hours time frame, we are seeing a retracement from a bearish move last, and you see the candle wicks gradually falling off to a bearish candle. So at this point, if we make an entry, of course, we're looking at about 1796 pips from the 4 hours time frame to the nearest support would be at about 3,171 pips from the entry point, of course, which is good money. And that's our technical analysis on today's stock market. Amazon. I remain your host, Nick. Bye for now.